With ever-increasing media attention focused on our national property markets, sometimes it's difficult to sort through all the information and statistics bombarding us. Whether it's on the TV, the radio, the press, everyone wants to tell us how poor property is faring at the moment. But what's the real story? Hi, I'm Michael Yardney, and that's what I'm going to share with you in this, my latest property market update. You see, one scare tactic over the last couple of weeks has been related to the latest results from the Real Estate Institute of Victoria, who claim that the Melbourne median house price dropped 6% over the last quarter in 3 months. Now, this has caused quite a stir, as you can imagine. There's been headlines in the media like the bubble bursts, and property investors are asking, is the Melbourne market in meltdown? Now, even if you're not in Melbourne, this is still very relevant to you, because if the powerhouse of Australian property is in trouble, we could all be in trouble. Now, sure, real estate has slowed, and while the doomsday speculators would like us to believe it's the end of the world as we know it, the truth is there are always peaks and then troughs in our property cycle. Look, that's just the way things happen. So let's try and make some sense of what all this means to homeowners and property investors. But before I do, I'd just like to tell you a moment about my new book called What Every Property Investor Needs to Know About Finance, Tax and the Law. With my 3 co-authors, experts in property tax, in property finance and in property law, we've written a great book showing you how you can build your own property investment business. If you treat your properties like a business, you're much more likely to get the financial independence you want and succeed, because it's not how much money you make, it's how hard that money works for you and how much you keep. So you can get this new book, What Every Property Investor Needs to Know About Finance, Tax and the Law, by clicking on the link below. Back to the Melbourne figures. See, according to the Real Estate Institute, the Melbourne median house price dropped 6%, as I said, in the last 3 months to $565,000. But I'm not worried. Why? Because I didn't really believe that Melbourne prices increased 20% last year, and I don't believe that they've dropped 6% now. You see, at the end of 2010, the Real Estate Institute of Victoria, which only looks at Melbourne metropolitan house prices, said Melbourne's median price rose 20% to $601,000 over 2010. Now, just let's see what some of the other media commentators and property market research houses suggested happened in 2010. Residex said the median price only rose to $593,000 and grew 10% in the last 12 months. RP Data had a median price of $483, and it said that Melbourne median prices only grew 3.6%. At the same time, Australian Property Monitors said that Melbourne's median price was $574,850 and grew 14%. Why are they so different? Who's right? Now, isn't the median price easy to calculate? Surely there can only be one true median price, as it's a strict mathematical definition. It's the middle or 50th percentile observation. The median of a sample home sales is therefore the middle sales transaction if you lined up all those transactions from low to high. So why are they all different? Well, it depends a bit upon the data they collect, the data they actually use, and then the accuracy and complexity of the index methodology they rely on. Now again, even though I'm discussing Melbourne figures, what I'm about to share with you is just as relevant to the figures wherever you are listening to this. So please stay tuned. Because see, even when you dig deeper into the Real Estate Institute of Victoria figures, you'll find that the median price in some suburbs increased considerably more than 20%, even in the last quarter, and other suburbs dropped, some by up to 20%. Now let's take a suburb I know really well, North Caulfield for example. According to the REIV, the median house price in that suburb plummeted 40% in the last year, from a peak of $1.8 million to now being down to $932,500. Now, does this mean that the value of every house in that suburb dropped 40%? Clearly not. Many houses in that suburb, and I know it well, and in fact other suburbs of Melbourne and other suburbs where you're living now, are selling for similar prices or even more than they did last year. Okay, what the median price does show us is the composition of the sales data during that last year or whatever period you're looking at. And it showed that currently there are fewer higher-priced homes sold over that period, which means the middle sales figure, what we call the median price, was lower than 12 months ago. Median prices for a city, or in fact a suburb, are really a poor indication of what an individual property has increased or decreased in value. Yet of course they're frequently quoted in the media and used for explaining what's happening in the market. The problem is, we don't have a market. There are lots of property markets, even in one city. Our capital city property markets are segmented by price points and then also by geography, different areas. Look, even in one suburb, some areas can outperform others in the same area. So clearly our markets, though, have entered the next stage of the property cycle, a time when values of some properties are going to fall. They will. Some they have. Others rise, and some stay stagnant. But is the market melting down? Definitely not. Now look, there's no sugarcoating it. We're at the stage of the property cycle where there are more properties for sale than there are buyers. This means we're in a buyer's market. But there are no desperate sellers giving away their properties 20, 30, 40% less than last year. Not in Melbourne and not in our capital cities. If you go to the Gold Coast, if you go to the Sunshine Coast, some regional towns, some mining towns, yes. But the capital cities aren't melting down. In a recent report in the Sydney Morning Herald, Dr. Andrew Wilson, senior economist for Australian Property Monitors, said Australia enjoys and will continue to enjoy one of the world's most stable market-based housing environments. And then he went on to explain a whole range of principal drivers that are going to give stability and growth to our property markets. These are the sort of things that I've discussed in many of our previous market updates. Dr. Wilson also said it's important to recognise there's no Australian housing market, just like I explained. There's not just one market. He concluded that a generalised collapse in a housing market remains fanciful and hopefully eventually a non-newsworthy concept. Okay, but what does all this changing market sentiment mean to people like you and me, homeowners and investors? Well, I think we can safely deduce the following. Potential buyers are being more cautious and more selective. More vendors are putting the properties on the market, hoping to achieve prices they didn't achieve last year, and good properties are still selling, but buyers are being more selective. This means fantastic news for investors because any slowdown in the market is going to create opportunities for buyers who take a long-term perspective. Well, how does this work, you may ask? Well, life still rolls on. People are still getting married, people are still getting divorced, people are still having babies. Our population is increasing by, 350,000 people this year, and so on and so on. The bottom line is this. Bricks and mortar is an essential commodity. Everyone needs a roof over their heads. If they don't buy a home, they'll rent one. And this year it's going to push up rentals considerably, isn't it? The point is, you really can't believe the hype. So what can you believe? You can bank on the fact that well-located properties over the long term are going to double in value over the next 7 to 10 years, which means that if you choose the right property, some will outperform those averages. Choose the wrong property, some are going to underperform, aren't they? So now could be a good time to take advantage of the buyer's market. Of course, it's only a buyer's market if you take advantage of the opportunities and buy. If you're looking to upgrade your home, it's a great time to upgrade in a flatter market. If you're looking to invest, it's a good time to take advantage of this and buy selectively. Are you ready to exploit the opportunities that are going to arise over the next year or so? Of course, I'm going to keep you updated with the changes and how to take advantage of this in future updates. But it's probably appropriate to remind you that in changing times like we're experiencing, no one can help you quite like the independent property investment strategists at Metropole. Remember, the multi-award winning team at Metropole have got no properties to sell, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your local market and what our research suggests is in store, why don't you join us for a free property briefing in Melbourne, Sydney or Brisbane? Just click on the link below to find out more and reserve your place. Now, with so much happening in the property markets, almost on a daily basis, I'm going to keep you updated with my short blog. This isn't my normal fortnightly market update, so if you want to get a daily quick update, just click on the Michael's blog link on top there, and I look forward to sending you those regularly, and this next update in 2 weeks' time.